Hi, this is Money from BSc to NSE.com, and in this video I'm going to talk about psychological shift between the buyers and sellers, and I'm going to call this video Nifty 1000 point theory, and it can be applied on stocks as well. And I'm planning to roll out a trader's dashboard, a beta version, just to see how useful it is to try and make some trades. And to brief you on this, have you ever wondered why a t-shirt or a product which is worth 1000 rupees, they price it as 900, 990, 999, something like that? It's because if you price a product at 1000 and if you price a product as 900, there seems to be more buyers coming in psychologically when the product is slightly in a 3-digit figure instead of a 4-digit figure, right? So in case of buying a product, something like a t-shirt where it's slightly different, wherein the buyers are more attracted below 1000 rather than little bit above 1000. In stock market, it's just exactly the reverse. Let's say a stock is coming down from above 1000 and it cracks below 1000 and closes the day or a week below 1000, then the buyer sentiment goes down a lot, meaning the buyers who are holding it as investors or traders who are having positions in futures or options, then the buyer sentiment goes down a lot, takes a drastic shift on the way down. On the other hand, the sellers who are shorting it to make gains from the stock going down, they'll tend to feel more and more comfortable when the stock goes down below 1000 and closes below 1000. Okay. On the other hand, a stock which is going up and from below 1000 and then closes above 1000 on either a good news, or we don't even need to track about news here, just look at the price action movement. When it closes above 1000, then automatically people who are holding the shorts, they're like, oh my god, it's going above 1000, so I should book a loss. So the people who are short, they tend to book loss and they tend to get scared here. On the other hand, the buyers tend to get even more greedy or add positions as investors, or take a long position as traders. And we tend to see sometimes the price kind of takes a drastical shift from there. Okay, not always though. As with any other ways of trading, everything has a noise and a possibility of a failure. So I'll try and show you this theory happening in Nifty. And the other thing is, there's also important options contracts where people tend to book profits, and there's an added push that happens because of the shift in mindset between the buyer and a seller at these important levels. And for a stock which is less than 1000 rupees, you can apply this as a 100 point theory, meaning a stock like Dabur which is at 250, when it's hitting 200, it's an important level to watch. Similarly, when it's hitting 300, it's an important level to watch. Okay, and let's get to the charts now, to where I can kind of show you what's happening here. This is the Nifty chart, weekly chart. So this is the previous peak when Nifty hit 9000 and at a PE ratio of 24-25, and we started dropping. As you can see that it had a spike on this weekly chart. The high value is exactly 8996 and it hardly touches 9000, and then it drops almost 500 points from there, and then again it goes, spikes and hits above 9000, but it fails to close above 9000 either on daily close or a weekly close, and then drops drastically again by another 500 points. So once it's unable to cross 9000 psychologically, the sellers eventually take it down till 8000, and again at 8000 you can see that it pulls back here, small spike, and then from that it rebounds till 8500. So I mean, there's a mini level in the 1000 point theory. Even the intermediate 500 point level is reasonably important, or you can keep that as your first target. So let's say if you're going short at 9000, 8500 is your first target, 8000 is your next target. So similarly, you see a rebound at 8000, 8500 is your first target, and you can see here that it hits 10 points short of 8500 and then falls back by 500 points, and then a single weekly close below 8000 and a marginal close below 8000 by 50-60 points, and then the subsequent week itself it rebounds, goes till 8600, this time mounts 8500, consolidates there for almost a month, and then eventually drops on the China devaluation. And then this time it has the enough negative news to crack 8,000 and crack 8,000 big time, and the low point is almost 50 points short of 7500, almost 500 points crack below 8,000, and then eventually rebounds till 8,000. And you can see 3 weeks it fails to, struggle to cross 8,000, and then eventually it crosses 8,000 because of RBI governor who gives a 50 basis point rate cut, which was totally out of the blue, totally not expected by the markets, and which gave it some more push till 8300. Eventually, again, since it was still in a bearish phase from a peak PE of 24, eventually drops back below 8,000, and this time it hits 7500, cracks 7500, consolidates around 7500, and eventually goes down by another 500 points and gets to 7,000. And by this time, when it hits 7,000, the PE ratio is well below 20. I think close to 18.5 or 6, and then the budget is then it's close to the budget time, so it just keeps consolidating around 1,000, and eventually post budget, with the government recapitalizing the private banks and so on, it just rebounds big time, and then the immediate target of 7500. And of course we had closes of below 7,000, but not by a huge margin. It was mostly hovering around 6900. The lowest point was 6825 on the day of budget, which was more of a spike down and then rebounds eventually above 7,000 post budget, and then like I said, the initial target at 7500 consolidates around 7500 for 2-3 weeks once it gets to 7500, and then eventually goes up till 78, falls back close to 75, and then eventually hits 8,000, and you can see the couple of weekly spikes here close to 8,000. So from 8,000 again it drops by close to 300 points, consolidates, eventually manages to mount 8,000, and then goes up quickly by another 200-300 points, falls back to 8,000 on the Brexit event, again a spike below 8,000, but we did not have a daily close below 8,000. Even on the Brexit day, the daily close was 80.55 or so, wherein psychologically the buyers managed to hold 8,000, and then again followed by a spike and move till 8500, and then it consolidates around 85, 86, 87 for quite some amount of time, and then moves to 9,000, almost like I think 8960 or 70 was the high this time, and then with Fed rate hike possibilities drops by quickly by another 200-300 points. So again, like I said, according to the 1,000-point theory, the 9,000 will be a huge psychological barrier for the bulls to mount, and ideally we want to for the bulls to carry forward and push Nifty much higher above 9,000. We need a PE ratio of less than 20. At a PE ratio of 24, there's going to be good amount of selling coming in, and which will eventually try and create or move into a bearish phase eventually. So let me show you a few stocks where I kind of remember some big opportunities coming, wherein instead of 1,000-point I can show you something like 100-point opportunity. I'll quickly enter Dabur here. Dabur, if I remember, there was a day when the black money list came out, and the Dabur CEO or someone was involved in the management. So quickly to show that part, you can see here somewhere in mid of 2000 or late 2014 the stock drops drastically towards 200, and the low point was 205, and psychologically rebounds from there, and then you can see this big spike here wherein the low point at 196, and again the stocks swiftly rebounded till 250. You can see 2 weeks of spikes. Let me try and zoom up on this, and now the other way. Okay, you can see that again once it rebounds from 200, quickly goes till 250, and then almost hits 250 here, and then drops quickly back by 30 rupees. Is almost 10% drop, and eventually mounts 250. Once it mounts 250, it eventually takes support at 250 again and moves till 300. Yeah, and then fails to hold 300, drops below 300. As soon as it closes below 300, we see some quick move towards 260, 250, 240, and then again quickly moves till 300. You can see again hits 300 and drops by 20 rupees. So as traders, you don't need to hold for too long. You just need to try and trade these crossovers where these important crossovers happen. And off late, I think Tata Steel has a recent uh, their results getting announced, and you can see here that before results it had hit 400, and then the next day it fails to close above 400, comes down below 400, and then an immediate drop and a quick drop, in fact, on disappointing results. So as soon as it just crosses 400, if you just have it on market watch and see the next day that it's closing below 400, just go for a put option or a short in futures, preferably just a put option, because you want to limit your losses in these kind of cases and keep the bet very minimal. And sometimes you can see some really good returns on these kind of trades, and you can see here Tata Steel where it hits below 300, a spike below 300, and then manages to hold above 300, and then immediately rallies almost non-stop till 330. So these are all the kind of trading spikes that I'm talking about, wherein it just spikes below 300 and then holds 300 and then moves up. Similarly, a move above 400 and then fails to hold 400 and then drops quickly. So I'll try and develop a dashboard wherein we can see such kind of crossovers happening, and try and make use of it as traders to trade on it. And let's just see how that goes. That's it for now. Thank you. Bye bye. Subscribe to our channel and stay in touch, and log into bsc2nse.com. There's an opportunity to get a free training from us, and try and check that out. Thank you. Bye bye.